right from the budgeting mechanisms, the approvals which have to go, and this is at an organization level. What happens is, in the after effect of that is the entire cycle is so huge that there are like people who literally dread to do business with you.
Hi everyone. I welcome you all to CFO's POV episode 2. In the last episode, we discussed about how generative AI is transforming finance as a function. And today we are gonna focus on accounts payable automation, how finance as a function can leverage automation. And today we have with us Dina. Welcome, Dina. And she's well-known thought leader among the community as a finance leader. And today we are going to dive deep into finance as accounts payable as a function of finance, and how different organizations are leveraging different technologies to automate this function. So Dina, to start with, why don't you explain how different organizations have different processes with respect to procure to pay as a process, which essentially is resulting in accounts payable or payable automation. So why don't you put some light on that?
Sure. Thank you, Shubham, and welcome everyone. It's a pleasure to meet you all in this forum. So when we talk about accounts payable or procure to pay, why I'm interchangeably using these words mainly because different businesses, different processes connect to, we talk about the whole process with these two main ways in which we describe the process. At the core of it, what is accounts payable, or what do you mean by a procure to pay, and why do you have to automate, right? I mean, it is just a process of buying stuff. Why do you have to automate? But now let's dissect the entire thing of how does this happen, what is a fundamental way in which, why this is very core for a business. So when we're running a business, there are two aspects, the relationship with two key parties which are absolutely at the core of it. And then there is the third one. One is the customer, the other is a vendor who gives you the goods or items which are either required for manufacturing a final finished product which you have to take to the market, or it could be the services which somebody is providing you, which is absolutely essential for rendering your final product in the market. So this is where the vendor comes into picture, and then of course your team, your people part of it, which is where the payroll happens. And if you look at the finance part of it, these three are probably 80 to 85% of the entire money flow of the entire business that happens for any concern, any entity. So when it comes to vendor, there are going to be two parts to it. One which is directly related to what you have to render as a product, and the other part could also be that things like a fixed asset or anything which you have to procure from the market which is outside. And this has again got different aspects to it. One, you have to identify the need. And when you have to identify the need, that is connected to your entire planning, how the business should go for the entire year. And second, you put a budget to it. Once you have identified the need, there is a budget to it. And all of these get collectively approved at a certain level. And that goes to the approval workflows. And then it gets distributed into different departments, different functions, who will be the person who decides ultimately what has to be procured. And that's where the entire thing of, intent to procurement to the entire process of the till the payment is where the conclusion of the entire process of procuring something ends, and that is why we call the procure to pay aspect. And when you look at this whole process, you have right from the budgeting mechanisms, the approvals which have to go, and this is at an organization level, and then it comes down all the way to who has to be specifically approving the budget for the initiation of a particular item which you have to procure. And then it goes to, once that is identified, which vendor this should be procured from, which again goes through multiple processes of identifying the vendor, the commercial contracts and the negotiation which goes, and sometimes it could be an absolutely new item that you're procuring from the market. So which is where the vendor selection and the database creation happens, which is also a regular exercise. And then happens the right from departments who are giving the requisition to which vendor it goes to, wherein finally if the contract is done, a purchase order gets made. So all of this, when you look at it, there are approvals, there is document flow, and ultimately there has to be an invoice which comes from the vendor against which you are making the payment based on the payment terms which the vendor ultimately gives. So this entire process also has got a tax angle to it, wherein whether it is right from the GST which has got input tax credit and various other things, including whether it's a classification is right which comes into picture, whether the compliances have been taken care of, to the place where when the payment happens, in some cases where the tax deductions have to be made. So this entire process and ultimately transfers back into the way in which you are moved and the way on the date and the commitment based on the terms that you are making the payment. So I think I'm tired explaining the whole process itself. So you can imagine if all of this, how many departments have to come into picture, how many people will have to come into picture. Ultimately, there are how many systems, I mean, right from the document flow to people commercial negotiations which are happening, different stages which have to be captured, the approval mechanisms, comparing with what came in and whether that has been fulfilled properly or not, all the way to taxation and making the payment. This is the entire thing of the procure to pay, and this complexity can vary by the size of business, the kind of business you are in, which means the industry you are in, the kind of availability of materials, whether the materials or the service that you are looking at is a particular one that only suits your thing, or there are only few things which can suit your requirement, and what is the price that it comes at, the negotiations that continues. So all of this is a part of the entire procure to pay process, and this is the need of the automation that's required, and also the connections that are required between multiple systems. So that's in a nutshell what the procure to pay process entails and why we are talking about this session of automation.
I think you very rightly mentioned all the process, like how it starts with budgeting, and then there's a requisition requirement, then it goes to the RFP or evaluation, and then to a PO, and then eventually invoice is received and the payment is made. Now, presently, while as a best practice, this process is getting implemented across organization, but most of these processes are happening in silos. So for example, budgeting might be happening in one particular system. From there, data is manually flowing to a ERP system which is addressing the procure to pay. Let's say till invoicing or bill collection is happening in a ERP. Eventually, on a particular date, MIS gets generated from a ERP and fed into a banking system, and then at the month end, reconciliation is the biggest activity that consumes most of the time of the finance teams. So, I mean, what is your observation presently in the market, how some of the other tech-savvy companies or the, some of the other finance professionals out there in the market, how are they leveraging technology and automating these multi-silo systems into a unified process?
See, there is, right from when you look at the finance processes, it is not only a finance process, this is beyond finance. I mean, right from the operations part of it, as we mentioned about when you look at the document flow and the approvals flow, and then culminating into the finance processes of validating whether, which vendor selection does it make commercial sense or not, what are the margins and the costing like, and whether we can take it up or not by comparing with the budget. All of this gets into the finance process, but ultimately, the procure to pay has to be looked at in totality. There are internal controls to be taken care, the delegation of authority and the metrics which we have to take care at the end of the day when it comes to approvals. And that's where today there is no single system that takes care of the end-to-end automation, whereas with the ERPs coming in, the internally built or developed ERPs when it comes to very large enterprises, and there are, when it comes to, for example, the ERP for an engineering works kind of a segment could be and locally made, or even for that matter when it comes to much larger companies, maybe the ERPs which are at the implementation itself tailored to the way in which processes are defined within the organization. While all of that could take it to some extent of the documents and approvals, still the connectivity or the missing connectivity to a very large extent is on the banking side. When I talk about the banking side or the payment side, it could be layered into how you are making this payment ultimately to the vendor. It could be through a direct bank transfer. It could be through a card. It could be through I mean, of course, for a larger company, UPI would be less about when it comes to a miscellaneous or any other expenses one would use that aspect. So, which is where comparing all of this, how the payment went, and always remember what reflects in your ERP is not the amount that you see in the payment, because it will be addition, add GST, less TDS, all put together. You can't even make a comparison, and these two systems doesn't talk to each other. So, which is where this humongous task of by the end of the month understanding what payment went. And then you have 10 calls, assume you have 1,000 vendors to pay out in each cycle, and most of the companies would have, larger the company, you would have set days and ways in which the processes are happening, wherein vendors are being paid out on. And those days, if you miss, assume you don't have the right systems to figure out which all have been the payments that had to be made, if the names are similar, from where it goes to the bank, or whether mix up on the vendor settlements has happened, which is where the aging analysis, the day on which the due date listing and what you have to pay. Again, the funds planning related to that. Sometimes you might decide that maybe 3 vendors we can inform them and pay later if you don't have the money, or draw down the limits if you, or the limits if you have to honor the settlements. All of this put together for the decisions. One, the systems doesn't talk to each other. Second, you don't have a single unified place wherein you can make a comparison. Third, even if you act, even if you want to validate whether I have acted on the right data, right due date, vendor settlements or not, you don't have the final information to say which payment has been against what and which invoice. And also always remember there is an in-between validation before this goes for payment approval, also in terms of whether it's the right goods and items, comparison to the PO, comparison to the items that have been delivered or the services that have been delivered, the milestones. It could also be in services, maybe the milestones which have been catered to. All of these put together, the exact quality check before you pay. These two are not connected, and that is the biggest headache in if the automation or the systems connected are not working in sync. And that's something which I believe is a need of the hour, in the sense it has been going on for ages. We were to good extent able to automate while documentation and approval flow. What is missing is the triggers and the connectivity between the banking or the payments flow and the rest of the workflow part of it, which is creating this huge gap of manual intervention, related errors, related omissions, and related inability to understand a real-time cash flow.
I think you rightly mentioned the two aspects of it. One is the workflow, wherein the complete process plus the documentation part of it is taken care of, and then we have the payment flow, actual payment flow. The two systems do not talk. What could be a possible reason, like all these custom ERPs which are there available out in the market, they most of them do not have a bank connect. What does it take to have a bank connect in a ERP?
See, by design, it has been, ERPs have been designed and productized mainly for this workflow management and workflow solutions and automation, and which to the true sense it is working very, very fine right now. But when it comes to the bank connectivity, it is both by design of the legacy systems which are there, also by, that's where you might see host-to-host transactions which are getting triggered with very limited number of banks, and but at the same time, if there are cards which are being procured and used, and you have the commercial cards and the host of things which are being used for making the payment, that is a completely separate instrument which doesn't talk to any of the ERP as of now. The spend management, or probably the entire approvals and the spend management part of it, which shows for what payment you have used is card, for example, which department also you wouldn't even know at times, right? I mean, if it is given to a department, who used for what within the department, it's a big huge mess of figuring out against what this has been used. So there are multiple, understand there are multiple instruments which goes through multiple networks and different systems, and not seamlessly all of them are connected to an ERP. And this is exactly has been a historically this has been a challenge for the ERPs to directly trigger transactions. And that is where I believe, banking has to be the core of the workflow management part too. And that's where connected systems, when you look at it, this is where the concept of a connected banking or a connected finance part of it, for the finance to run smoothly, it's not only the document and the approval flow, but it has to be completely tied in with what is the money flow. And these two, when it comes together, is where connected finance come together. And that's something which is core to my heart also, because I've been in the eye of this problem for years together, looking at departments, looking at, driving the discipline right from approvals to the, when you're looking at, even if you want to delegate and still figure out what's happening is according to what you want, and vendors are being, the vendor management is happening on the right basis or not. Payables, the discipline is there so that you don't have a bad name in the market in terms of people don't dare to deal with you. All of that is something which, as principle, as values, you really want to drive within the system, within the function. And how do you do that without having an army of people around and reconciliations and errors which you are glaring at or looking at? And that's exactly where connected systems I'm a great fan of. And that should be the core of the automation.
Yeah, so just extending to what you mentioned, so oftentimes what happens in large organization is that the finance team member keep on chasing the employees that you need to submit this bill, this expense has been raised, but the bill is missing, and maybe because of audit or compliance perspective, and that is the reason why many a times in many of the organization, people fears the finance function. They see finance as, they'll chase me for the bill and all those things happens. Do you believe that a streamlined system can actually make the finance function more friendly?
Of course, I think you're right. Finance, normally the perception is that they are starting with a stick and they're very strict. They don't allow you to go from left to right, and things don't happen that easily. But I feel, yes, with the right tools in place, and it's also about the convenience, right? Everybody who deals with you, external or internal, are your stakeholders, your customers. How do you improve their experience? Because you're right, chasing them to upload bills, can you identify? They have hundreds of other things to do in life, and their primary responsibility, there are so many things, whereas 30 to 40% you are the ones who are slowing them down, asking for all of these information, which takes up probably 30 to 40% of their time to take care of these administrative headaches. But the finance function doesn't have a choice other than to do it, because it touches various, we know for that matter when we face the audit, right from documentation to what happened to the explaining the history to whether you have followed all the processes in terms of ensuring that the prudence and the commercial part is taken care. So we don't have a choice. So it is something which collectively we have to come together, and as a part of the customer experience, it's very important that you give them seamless workflows. And this is where today, for example, if you look at a typical HRMS system, you have for all the employee related the submissions on reimbursements that have to be made, or when it comes to card or any other petty cash they have to take for any advance on behalf of the company. All of those systems, HRMS for example, it is automated to some extent. In some ERPs or internally created systems, it's automated. But now think of the place, maybe it takes care till, as I mentioned, till the document flow and the approval flow. But when it comes to the payout, where does it happen? And if 10 payouts or say 1,000 payouts have been done in a cycle and 10 of them returned, you don't have a go other than you have to wait till the time you would receive the information from the bank, and then you have to go and reconcile which one failed, and then you have to go back, right? So this is where fundamentally the issue happens, and this is true to every other system. And that's where it is all the more critical that all of these things are connected, and you don't have more dialogues. For example, if this fails, obviously the people are going to come back and ask you, whether the payable or a vendor is going to come back and ask you, what happened to this? Can you please share this particular payment which you have made? Can you please let me know? Imagine a world wherein these two are connected, and then immediately you understand this is a vendor you have paid, immediately send an intimation automated which says that this payment have been done, this is the net of it, and this is against so and so invoice. That closes hundreds of other bandwidth required for 3 people, 4 people sitting and doing, depending on the volume. And the bigger the company, bigger and more complex the touch points, it will be more complex, right? And this is where when you're using a card, imagine if you have a spend management or identification on which merchant, where it has been done, and identifying that it is for this particular spend that you have used your card for XYZ amount, and then tomorrow coming back to the compliance in terms of the filing, comparison, reconciliation. Imagine how much of time, accuracy, and people, like, it's not good to have a huge team who is just sitting and doing manual reconciliation. Neither their career is progressing nor you are getting any benefit out of the entire thing, right? So this is where we have to make a balance and ensure that automation takes care of most of the mundane tasks which could have, which is prone to error, or which could dent somebody's experience, or it could even be a perception creation in terms of whether you are a good person to, or a good company to deal with by a vendor in the market. Like the way we choose the vendor, they should also choose you, right? And that's important. And these are the aspects which ensures that overall as a brand to deal with, you stand out, and this is what gets you to very good deals over a period, a long relationship, and which translates back into the commercial discounts and the ways in which the pricing power that you'll be able to get in the market.
Right. So much to consume. Do you also believe that because there is so much of reconciliation work that has to be done, the finance as a function and the team members are almost all the time overwhelmed? Could this, not automating could actually be resulting in them failing to upskill themselves, because most of the time they are already occupied in, they are just chasing deadlines all the time?
See, this is where automation, earlier when we look at it as a finance function, right? How quickly you close the books, monthly closure, annual closure, compliance on time, again, you look at the reconciliations right from input credit to the taxation on the 7th day that you have to pay, all put together. It's a race against time, day in and day out. Forget about the month. You have month beginning, month mid, and month end. When it comes to the taxation, it is beginning and the mid, and then, and towards the month end is where all the closure activities have to happen. Then imagine the mad rush for the year end. Then comes the audit related, and that's where documentation, showing the trail from where it is. And today, if you look at it, you refer to different systems. One is your ERP, then you have to go back to your bank account, then you have to go back to your files and where the file storage is happening, related, the backup files which are happening, to show them the entire trail, then showing them the entire approval flow, which could be at another system altogether. And then, when we talk about the internal finance controls and the reporting and everything, we know how much of a mad rush it is towards the audit time, right? Imagine all of them seamlessly from one step to the other, all housed in a same place, which could be taken from different systems, or it could even be in the same system. But just getting it out there on your fingertips, showing right from the genesis of a transaction all the way to the payment, the history, interactions, what happened, approvals, everything put together, and the payment, all the way to even the taxation, which again interacting with different systems, all of them coming together. How easy this can be for everything that you talk about, whether it is MIS, whether it is information that you have to pass on from a costing perspective, which can be put in from a budget perspective, where you stand against a certain budget, because when you are manually approving, you don't even how many systems you have to otherwise refer, or sometimes you don't even know, just because things have to go, you just go ahead and refer to some documents which could be even be stale. But this gives you the option of having dynamic budgets, and this is more so important when it comes to new projects, new products, innovation, all of that, where time is very critical, right? And that's where sometimes a manual process could even, if you follow all the controls which are there manually, it could even be a 3 to 4 month process. For example, just to give you an anecdote, some of the vendors we are dealing with, end of the day, when we are providing services, we see the entire process running up to a PO, and at least that translating into an invoice anywhere between 60 to 70 days. You lose patience. You're literally second time when you are dealing with them, you're like, you really want to do that? And then after that, the payment cycle starts. And every time you hear, oh, this is how the internal policies are, there are approvals which are pending, there are like, systems which have to be taken care, and this is exactly where larger the organization, larger the problems. And you can't, I mean, it is inevitable. I mean, we all know coming from a finance side that some of these you cannot crash, and larger the organization, there will be more hurdles to get this done. And what happens is, in the after effect of that is the entire cycle is so huge that there are like people who literally dread to do business with you, right? So these are the aspects wherein in the current agent stage, that definitely shouldn't pose an issue, and that's where automation becomes extremely critical, and you don't have to have the army of people that you really want to. And the same number of people, they can upskill, they can go to the next. That's where I mentioned, the reconciliation and the maintain job, it doesn't ensure anybody has a career progression. For example, what do you do if they are doing it for 3 years? What do they keep doing if they have seen organizations where 300 400 member reconciliation teams are there? What do they do beyond, right? So that's where if you can automate this, they can be upskilled, the same set of people can really be utilized to do something which is, the growth they can take care, and they can absorb more and more aspects of, or more and more aspects of, the growth related and what is relevant, especially when it comes to maybe, figuring out the costing part of it, figuring out, focusing more on commercial negotiations, looking out for avenues where you can reduce the cost and thereby impact the margins. There are hundreds of other ways in which, and improve the controls, for example, hundreds of other ways.
Exactly. And the connected system, do you also believe that this make an organization capital efficient?
Absolutely, because that's exactly where, both from a capital efficiency perspective, if you look at it, all of these parts which we are putting to render, this is a part of rendering the service. Technically, AP particularly, most of the time it would translate either into the direct cost or probably, as a cost which comes overall, right? As much a problem which can be automated with a tenth or even lesser of the cost, if we are putting people to the problem, one, it impacts your scalability, and second, it is a problem on your accuracy and decision making. And ultimately, this is where all of these are going to, and you don't have the ability to actually, you don't have a real time data information or the ability to actually dial it down or drive it down in terms of, or improving the margins for that matter, as efficiently as you ought to be. Because when you're about to take a decision, suddenly there would be this problem of, oh no, I mean, by the way, this information, there are this 10% of the cost is unknown, or 10% of the thing where, because of the mismatch in what we have identified and recorded in your accounting books. And this is all because, you can't identify it from the banking side to this one. And suddenly you see that you're crippled and you can't take a right decision in terms of, what is impacting where. And again, repeating, larger the organization, larger the problems. And that's where significant margins can come into picture. And that's something which, that's I believe, where we have to be way mindful and consciously looking at automation and connecting systems, because different disjoint systems is where the entire inefficiency in the finance function is stemming from, in terms of availability of data for decision as well as for solid decisions to be made in terms of improving your margins.
Okay, so yeah, so standalone systems make you inefficient. In the given scenario within the competition is high, every company is leveraging technology. How important is data-driven decisions for an organization from a finance perspective?
See, data-driven, any decision has to be, your decision quality itself is a byproduct or the result of how much of data, how accurate it is, and how capable you are in terms of reading all of these together to infer something and say that this is an action that needs to be made for correction or for improvement. So in the whole scheme of things, that is where accurate information is the fundamental or the basis on which quality decisions can be made. And which is where often, I'm sure most of the people who are listening to this also would understand that sometimes we need, can I get this cut of data, that cut of data, this data to make a decision, and suddenly we feel there are, out of 10 puzzles, 10 missing pieces we want to gather, maybe 6 are available on time and the remaining 4 will be very critical for decision, but it is available 10 days after the decision had to be made, right? And this slows you down significantly, and that's the problem. With most of the time this is not available because it is coming from disparate multiple systems where data is residing, and it's not all coming together, and that impacts finance the most. The other part will be, you know, the product and various other areas can also, for the lack of data, but finance the most because it has got direct impact on your ROI, direct impact on your efficiency, direct impact on whether something makes sense or not to even continue with certain lines, products, etc., right? And do you have a path to profitability or path to a much better way in which can be rendered or not? And that's where I believe it's most critical for finance function than anybody else.
Great. And another important question that I wanted to touch upon is a lot of organization, specifically in India, they are, I mean, the accounting software in many cases is an offline software.
Right.
In many cases, it may not have a workflow. Multi-bank connect is something which is out of question because the software itself is offline, and also even the banks do not allow access through offline systems because there's huge risk element that comes into play. How critical it is for a CFO to you know, be aware about the new innovations that are available in the market, leveraging those innovations for their business, and then moving ahead to the next step on the next phase of growth of their respective companies. I mean, how, where the gap is in terms of communication, or why the awareness is not there?
So in fact, finance is such a function that for ages together, I mean, we have one way in which we can go is people can be put to the problem, and reconciliation has always been a major part of any finance function for that matter, right? And bank reconciliation, I don't know which module we would have ever studied in accountancy or even in finance which doesn't deal with the bank reconciliation. So it is, to some extent, we all made peace with the fact that you will have to deal with different systems, and this is going to be a exercise which requires, you know, reconciliation from a manual perspective. But times have changed, and that is exactly where, when we started looking at this gap of decision making, why is the data not available? The cash flow data is the biggest one which you just have to have real time. And why often you don't get it and you have to do so much of data crunching to get to a real cash flow situation. The problem is disparate systems, and that's exactly where the connected finance also comes into picture. How do you connect all these different systems, and ultimately if finance have to come together, it has to connect to the banking system. And today we have multiple ways in which the banks, I mean, connecting to the bank, depending on the geography, depending on the banks that you're dealing with, it has to have a, one, the infrastructure capabilities, second, licenses and relevant ways in which you have to deal with the banks, and the third part is also the critical part is the system capability, right from the cyber security to the critical things like, you know, the AML, KYC kind of mechanisms wherein whom you're dealing with, how you're dealing with, right from a security perspective also, right? So all the three put together is where banks were also initially hesitant, the central banks were hesitant to allow anybody to connect with it. But today, as we see, we have evolved and come a long way from where it was. And that's where, for example, when we started building Open also, we had this whole dream of getting a cash flow real time just on your fingertips. And for that, what we also found out is the biggest gap is banking system not getting connected to others. And when we went ahead and now having a connection with almost 19 plus banks in India, particularly with a PAPG license, and I mean that's where I'm talking about the licensing, the security, and the highest level of security. The banks, I mean, we are the first one to partner with the banks like SBI, and you go through a huge amount of security audits, checks, infosec checks that you have to go through. But bottom line is that today it is a possibility, that which we couldn't dream of maybe, you know, 5 to 8 years back when we started off Open also, which is 7th year right now. We remember that was the point where it was all stuck. But today world has moved on, technology, regulator, banks, everyone, fintechs, all of them collaboratively work together to solve this issue, which has been historically has been an issue for the finances department. And today if you see, it's not only us, there are multiple options of connecting to the banking system. And today, for example, if an interface like Open, if you come to, not only different systems are connected, but the banking and the payment system also, right from your payment gateway to the cards to UPI to bank, you name it, and all of them are on the same platform. You can run your payroll, but earlier imagine, as I mentioned, reimbursement or payroll is processed in a different system and processed in the bank separately. Either it would be a physical letter which goes, or you upload, and there could be errors, there could be like, things coming back. But today seamlessly this payroll is connected to banking. You can trigger the transaction right from the payroll software itself, and you will get a dashboard which shows how many got done, which all other parties you didn't get, and if at all, you have to re-trigger, same place you can re-trigger. Paying to a vendor. I mean, another classic example is how the banking system / the payments is not connected with them when a payout, right? For example, when we talk about AP, we have lending as such is a very separate vertical that we see in the market. But what is lending? End of the day, if you don't have money to pay to a vendor at that point in time when you have to honor his payment, you need to have some source from where. If you don't have it in your bank account, if you don't have it in your card is also a lending mechanism, right? So it is nothing but just another option to pay. And why is it standing as a completely separate vertical right now? And that's mainly because of the fact that the systems are not connected, and somebody has to sit in between and decide whether I need to use my existing bank balance, or I need to use the line that I have, or for growth I have to pull down from, make an application. All of this decision happens with half-baked information, and somebody who can't see it end to end, but they have to still make something in Excel, something in a dashboard, and then make a decision. But imagine if both of them are combined on the same platform, and when I'm making the payment to a vendor, when I'm doing a drop down, I know exactly the net of the tax that I have to make the payment, and I have the option of, maybe if it is a 1 lakh payment, maybe it's a 10 lakh payment, making a 5 lakh from my bank account, 1 lakh from my card, and the rest of the 4 lakh from my OD that I can just, the line I can draw down and pay. That becomes a completely easy mechanism, and each one, it shows me how much is the balance I have. Imagine if that happens on the same interface, how easy it is for me both to transact and to understand post a transaction what exactly happened there. So this is where the power of connected systems and banking and payments getting connected to workflows sits very well for finance departments.
It is imperative, if you are a CFO, that you must have a connected banking experience for your accounts payable, your finance as a function holistically. You have a complete visibility as to from where funds are coming, when funds are coming, a real-time actionable insight as to what has to be done. And if that is not done, that is not achieved, I think it is very difficult to scale to the next growth phase of your respective company. So I hope all this information was helpful. We tried to cover all the processes, what the gaps are, and how a CFO can leverage the technology which is available right now, which may not be an option like 5 years back from now, right? But today we have, we can enable superpowers to CFO, and that's the whole objective of bringing this podcast, CFO's POV, to impart them with what is happening out in the market, what new technologies are coming, how they can leverage the technology and be on a growth phase internally at their organization. So thank you very much for joining. Thank you so much, Dina, for your time. And please do like, subscribe our channel. Do let us know how the podcast was. If there are suggestions, we are all ears. We want to know further how we can improve these sessions. And thank you so much for that.
Thank you.